Hello and welcome to Business Incorporated live on Channels Television. It's the TGIF Trading Day right here in Lagos, Nigeria. Here's what's coming up in the next 55 minutes. Inflation reporting season hits up as National Bureau of Statistics reports October CPI at 33.88% with a 2.64 percentage point month-on-month rise. And Ghana's Environmental Protection Agency is set to add the country's Ghana Carbon Registry to a blockchain-based platform. Plus, European Union pledges more support for socio-economic development of South Sudan. And it's great to have you join us. I'm Ladi Williams. Let's get a check on what's playing out in the markets. You see gold trading a little change, but set for its worst week in more than 3 years, hurt by a stronger U.S. dollar amid expectations of fewer Federal Reserve rate cuts. You see spot gold there rose by 0.1% to $2,569 per ounce. An early trade after 5-session slide. It was down more than 4% for the week so far. The bullion hit a 2-month low in the previous session and has declined more than $220 from the record peak hit last month. Let's get a check on what's playing out with oil. It's also down. We see with the oil market, we see oil prices down on signs demand in China is not going to cut it. At this point, the world's biggest crude importer continues to underperform amid its uneven economic recovery. Brent crude futures, that was down about 65 cents at $71.91 a barrel. Still around that range from earlier this morning. We see the prospect of higher supplies from the U.S. and OPEC plus. All of that weighing on prices there. So, and don't forget, we have our benchmark there for our 2025 budget, $75. That's a sweet spot. Let's hope that actually happens at some point. And here we see Nigeria's headline inflation is quickened in October after a hike in fuel prices and floods in food-producing areas. That's affecting consumer prices, increasing the likelihood of another interest rate hike. Data from the National Bureau of Statistics shows that October's inflation, that's at 33.8%, up from 32.70% recorded in August. Headline inflation slightly accelerated in September, reversing a 2-month ease. October's food inflation quickened to 39.16%, up from 37.77%. recorded in September. And it's that time again when governments share their spending plans for the coming year, and it's 47.9 trillion naira. That's the proposal for the 2025 fiscal year. And according to Mr. Bismarck Rouhani, I had a chat with him earlier. He says the key assumptions of price of oil and exchange rate of the naira, they seem quite unrealistic going by previous budgets. Take a listen.
This year, there's no figure for inflation in the projected budget. Again, like I said earlier, the exchange rate last year was 800 naira target. This year, the target is 1400. What is the relevance of using 1,400 as the projected exchange rate? You and I know that the true value on a PPP basis for the naira is about 1,100. We know that the market today is trading at 1,735. What the federal government is saying is that, yes, we realize that the naira dollar value will not go to its PPP value, but we are realistic enough to know that we are putting it at 1,400, which is what the aspiration is. But if last year you budgeted at 800 and the actual outcome was 50% lower, which is it came out at about 1,700, then we have to be careful with the budgeting and our expectations for next year. One other very important point is that the oil production last year target was 1.78. Our average throughout the year was about 1.3 million barrels. Today, the budget is being based on a production level of 2.06 million barrels a day. Is this realistic in the context of the new leadership in the United States? Is it realistic in the context of the new budget and OPEC?
Yeah, that was Mr. Bismarck Rouhani. They're reacting to this proposal for the fiscal year 2025, about 47 trillion. Well, let's break down the recent inflation numbers now. Joining me for this, Mr. Ayodeji was the MD, Optimus by Afinvest. It's great to have you. Happy Friday.
Yeah, Good afternoon. Great to be here.
So it's another rise for the inflation rates. The rate of rise is even higher at about 2.64 percentage points. But I'm guessing no surprises here, right?
Yes, it's in line with expectation. So we are projected about 3.8. So it's higher by 8 basis points. But the reasons are not new. When you look at, because inflation is measured on a year-on-year basis. So when you look at the exchange rate last year and this year, it's more than almost on 100%. You look at the fuel price from last year to this year, that's also close to that percentage change. So when you look at what are the major drivers, when you check, you would see that even based on the MBS reports, food and the beverages are still the major drivers, which contributes about 17% to the overall inflation, and followed by energy. You look at the tariff rates from here this year compared to last year. So you can agree with me that the inflation rate figure is showing reality. Even for some will also be of the view that it should even be higher than that. But it's a basket of different products, and as a result, it evens out. So, but when we say, okay, what does this mean? This means that purchasing power of the average Nigerian continues to decline. What if you are able to buy 3 units of a particular item in the past? It may be tough to be able to purchase 1 unit of that particular item. That is tough. And beyond even from the consumer perspective, you look at it from the producer perspective too. If there's less demand, it means that there will be less requirement for employees to produce. And as a result, if production is also going down, the unemployment will increase. So it has its impact on the cost of living and also standard of living.
And it's the same, culprits again, fuel and transportation costs. We're seeing high food costs. Do you think we're expecting too much, from this government and our economic, managers, expecting prices, not to be this high?
Yes, I think that if we look at one of the main reasons for higher food prices, insecurity is a major factor. So you look at most of the food producing area, while flood raised significant havoc this year, which impacted on harvest. But even a lot of farmers are having to pay in some areas to access their farm. And all these costs will be factored in. Secondly, you look at infrastructure. We will need to, that's moving things by road from the north, from the food producing area to the west or to the south. Who pays for that? So we'll also pay for that. So the cost of moving them has also increased. And as a result of that, it's going to impact on the cost of the item. So for us to tackle this, the number one issue to take care of is insecurity, so that there can be cultivation. Before we even start to talk about improving the yield per hectare and even movement of goods across. So that's the number one factor that needs to be tackled. If that is taken care of, it would impact, because once production improves, it's a demand and supply. Once production improves and there's more supply, then it will be able to match demand and prices would normalize. So, and these are like basic things that it looks complex, but these are things that the government should find a way to resolve. We're all aware of the exchange rate, which also has direct impact with the current floating regime. We will need more dollars for us to be able to sustain, to earn more dollars for us to be able to sustain the current exchange rates based on the demand and willing buyer, willing seller methodology that we currently use. So you would say that some of these things are are things that they are not beyond what we can solve. So we just ask government to intensify efforts to ensure that some of these things are taken care of to reduce the rate at which prices are increasing.
How do you see this impacting the equities market? We have the Friday trading session. This week, it's been back and forth, between the bears and the bulls in the market. What are you expecting for today?
We think that for that, the higher inflation rate will impact on cost of doing business, which will reduce profitability. But there are some of these companies, you look at the agri sector, because of because of some of the items that they sell, the substitutes are less. Most of the producers will prefer to buy in Nigeria rather than import. So we expect that they will also continue to also do well. Even you look at the telecom sector, beyond the FX losses, which is as a result of FX challenges, their top line in terms of revenue is also improving. And once we see a major tariff review within that space, that would also open up more opportunities within that. The banking sector will lead, we think will lead the pack in the coming year because of the recapitalization and the high yield interest rate environment. So when you look at their 9 months results, making significant income from interest income, but that's investment in securities, that will continue to propel the bank. So for long-term investors, we think that we'll begin to see early bird positioning ahead of full year corporate action that we'll see in the first quarter of next year.
All right. I don't know about you, Mr. Ebo, but I'm getting exhausted with these higher prices at this point. But personally, do you think Nigeria will overcome this season, higher prices, weak currency, weak purchasing power? Will this ever be a thing of the past, or is this just going to be here for longer?
No, these are problems that are not impossible to solve. So it's for us to be deliberate once you understand the reason for this problem. Say once you have that, you're able to understand that reason, then you are 50%, you have solved that problem. So we need to, once we understand that FX fits significantly, so our FX strategy, do we need to change to manage flows to reduce the rate at which we continue to depreciate? Insecurity, crude oil theft. So these are things that are within what government can solve. And we will just continue to employ that. Efforts should be intensified so that we don't continue to pay for some of these inefficiencies, which impact on cost of living. It's really tough in Nigeria now. I would say that our spending is benchmarked to dollars, while income is not rising at that corresponding level, and it's making it difficult for Nigerians to survive.
All right, definitely so much to unpack there. We'll see how all of this impacts the next MPC meeting by the Central Bank of Nigeria. But thank you so much, Mr. Ayodeji Ebo, the MD, Optimus by Afri Invest. Great having you today.
Yeah, great to be here. Have a great day.
You too. And talking about inflation, I also had a chat earlier with Estelle Dogwa. We're talking about medical, that's pharmaceutical, and inflation, and she preferred some solutions at this point on how the government can help arrest the rising prices there when it comes to pharmaceuticals. Take a listen.
The cost of medication quadruples or goes up to 1,000%, like you have said. The meaning for the patient is that how do I stay on treatment? How do I survive? How do I find the source of funding? The other thing that we don't talk so much about is Nigeria is a purely out-of-pocket market where the patient have to pay from the salary, from the income for treatment, which is not the case in most parts of the world. That being said, I think that they still an opportunity because despite all the challenges that the pharma industry is going through, there are emerging health technologies that are also coming up, which the government is beginning to embrace. We're talking more and more about genomic science, personalized medicine, and even using AI to understand more the disease within Africa, which would guide healthcare expenditure in the near future. But the private sector is actually doing not so bad. We've seen a lot of new private hospitals. There are also quite a number of new local manufacturers that are betting on healthcare. So I think that shows that the private sector can work hand in hand with the government as well to provide this level of alternative funding that can cover up for the deficit we are seeing.
All right, that was my chat earlier with Estelle Douglas, the co-founder of Syndicate Bio. They're preferring solutions to help galvanize this pharma industry. Now, to our next conversation now, we're seeing as technological advancements such as AI and automation continue to reshape industries. The global workforce is also facing a period of significant transformation. The rise of these innovations brings both opportunities and challenges. Let's talk to Omar Olatoye, now she's an organizational and development professional. Joining me via Zoom. Great to have you on the show.
Morning, Ladi. Thank you for having me here. I think it's afternoon in Nigeria. Good afternoon.
Yes, it's the afternoon right here in Nigeria. But, talk to me about, technological advancements we're seeing these days, with artificial intelligence, automation. What impact are you seeing on the global workforce?
Thank you, Ladi. I think that's a $1 million question that has always been on the table for all executives. How is AI impacting the workforce? The question is not really how AI is impacting, because we already know AI is coming. It's always been in the news. McKinsey has brought this up as far back as 2018, just before the COVID. There's just been so many talks around it that's going to come with 60% possible job, possible job eradication and all of that. So now the question is, how much are we ready for it? Because it is here. So how are people adapting to it? How are we becoming more creative? If you look at the definition of the AI itself, it's basically trying to emulate the human intelligence. So for us to be able to adapt and win this AI, grab of our job, we need to then be able to move one step ahead. What is AI doing today is taking over transactional, manual roles, tasks that are being done. And we need to then begin to look at it more creatively. We need to become more adaptive. How are we going to, it's disrupting. So how are we also planning to rise above that disruption? Is the major question now. And that's where we come in as AI, as HR, as organizational development. How are we supporting our people? How are we supporting the organization? So that's the question on the table as of today.
Definitely, at these times when you're hearing all this talk about artificial intelligence, as a parent, I want my kids to learn anything, that has to do with tech, at this point. But talk to me about skills that will be most valuable in the future job market.
Skills that will be most valuable in the future job market will be definitely skills that are technology inclined, skills that are, that are more creative, that are problem solving. That's what the part that AI cannot take. So if we look at whatever we feed into our ChatGPT, which is what we all do today, right? We feed in a question to ChatGPT, and it's going to just throw it back to us. Whatever we feed to it is what it's thrown back to us. So that inquisitive mind, that creative person, is the one that's going to look at the feedback from ChatGPT and say, this is wrong, ChatGPT, you've done it wrong. And ChatGPT will then go back and redo it. ChatGPT doing that work is based on somebody at the background who is technologically inclined, that's feeding ChatGPT with all the information that's going to throw back to you. So the question, how am I preparing my children to it, is we need to move our children from the age of telling them what to do. We need them to be more inquisitive. We need the kids to be more creative, trying to look for problems that they are going to solve. It's gone beyond trying to tell them what to do. They have to be prepared for it. And as leaders, we need to support institutions, training organizations with technological support on how to prepare the children for the future, and also how to reskill the people we have today on how to manage this technology. One, we must ensure our kids are not just feeding us what we give to them. They have to be very inquisitive. They have to be able to disrupt the traditional way of doing things and look for new ways on how to manage it. That's the starting point of what we need to do to help our kids today.
And it's quite interesting, our kids of these days, they're exposed to so many gadgets, at this point with tablets and phones. They started using them at an early age. So it might not be that hard for them, I feel, to transition with what's coming up. But, let's talk about remote work now. What kind of collaboration are you seeing and trends that will continue to evolve going forward?
So remote work, all thanks to the pandemic, which throughout the remote work made it very possible for us to all know we can work remotely. And of course, looking at statistics from diverse environment, we see that statistics from the US that says most people, 56% of people want to work remotely. A few of them want to have that hybrid. So how do we support it? Do we have that technological aspect of it in Nigeria to enable our people to work remotely, especially in this day where transportation cost is really high? So how are we going to manage that remote work? In terms of remote work, we need to begin to look at more of our we already have the Zoom that we're using today. We have the likes of Slack that we use. For project management, we have Microsoft Project Platform, diverse areas that support working remotely. Going forward, we see more of that being done. A lot of people are embracing it today to work remotely, especially because it supports the employee well-being. It engages the employee more. Those are aspects we look at for HR on how to support our people. And this is what the people want today. That's what to make them more engaged of the culture, create a positive culture. So remote is here. What are the facilities we are providing as an organization? Do they have laptops? Do we have that internet capability, or does the internet just fluctuate that people are finding it frustrating to work? Going forward, we are going to have more virtual working. It has come to stay, and as an organization, we need to prepare that enabling environment for people to work from home. It's going to be one of the comprehensive conversation for people on how we can better support them. Remote work has come to stay. People are embracing it. Statistics are supporting it. The World Fund also supports it to say by the year 2030, we are going to have just about 45% of open workspace. So there's so much going to go on in the future of work. There's going to be more remote, more virtual work, and that does not reduce the productivity of employees. It's for us to, as we give them the resources to work remotely, we also need to come up with how to measure their productivity to support organization as well.
Right, definitely, so much to do, to keep this industry growing. But, looking at Nigerian workers now, how do you think they can develop skills to remain, relevant in this rapidly changing, job market?
Yeah. In terms of the employees, the first thing will be, as much as we also said for children, the employees also have to be adaptive. That's the first thing. You need to learn to be adaptive. Innovation has come to stay. It has always been from the days of moving from mechanical to, doing things with machines and all. Now what we're looking at is technology, which is moving at a very disruptive, advanced speed compared to what we've always known. So for employees to remain relevant in the organization, they need to begin to look at it more, they need to begin to be more adaptive. They need to be more creative. They need to look at it while I might be an auditor today. Is there a better way to do my auditing? What else do I need to learn? There's Canvas. How do I make my work more easy? Marketing is no longer what it used to be. We have digital marketing. We have a lot of people working, doing a lot of things on the internet. So the first thing for employees is to have that inquisitive mindset and be able to adapt, to upskill, to grow from where they are to where they will be more relevant within the workspace. And the organization also needs to be able to support. Do we have LMS, learning platform within the organization? Are we supporting, do we have training as part of our budget? Are we supporting employees that are ready to learn, to move on to things? Are we helping to provide that enabling environment for our people? As much as the people will want to grow, we also as an organization ask to be in that position to support our employees, that as they grow, it's a benefit to us as well. When we support the employees will not resign. It's in the papers today, in the nations, that the number of people that are resigning because of one problem or the other. And that's not what we want. We want to retain our people. So we need to create that enabling environment where employees are willing to learn, and we help them to learn to remain within the organization.
Right, and definitely with a cost of living crisis and wage growth not matching, inflation growth is not matching, currency devaluation at this point. So I'm wondering, how are, HR professionals, handling employee salary expectations, when times get really tough?
I quite agree with you. The cost of living is more of a crisis today, more than ever before, with today's statistics reporting that we have 33.9% of inflation, and employee salary being grouped by a whooping almost 40% on transportation, all thanks to the recent increase in fuel cost. And so all of that are concerning for employees, and it's also impacting them. So how HR is supporting will be in terms of, we're beginning to get to that stage where we look at it that salary is not just about the take-home. There are other areas that we're looking at in terms of how to support the employees. It's becoming more of an holistic approach to compensation, which in terms of we're looking at other benefits. Remote work, we've talked about remote work, which will reduce the time employee spends on the road. The Vanguard reported within the week that an employee spends about 45% in traffic. Lagos, an average person spends about 45% of their work life in traffic. So we need to be also at that position that we embrace remote work. We do more of virtual to help an employee ease out that cost of transportation on their compensation, and also get to that stage where we are also looking at employee well-being. We're looking at how to support them, because a lot of people are bottling so much in that it is time we also look at their welfare. How can we support them welfare? As part of the holistic approach, it's also time to begin to look at the deferred benefit. We should move beyond what the government is planning for pension. We want to retain our employees. We want to give them that after work life experience. We have to look at deferred benefit. How can we support them? What training are we providing on how they can manage their salary today in view of what inflation is doing? How can we support them better? So basically, HR has gotten to that stage where we're looking at compensation as an holistic, package. It's not just about the monthly earning, because as much as we want to support the employee, the organization part is also there. They are also struggling in the current situation of things in Nigeria. So it has to be a win-win. Support employee, use more of their pay for themselves, and be able to be productive to the organization. That's what we're looking at today, an holistic approach to salary.
All right. Thank you so much. A lot to unpack there, and definitely we're all hoping that that relationship between the employer and employee, gets better and doesn't get ruined, by a cost of living crisis. But thank you so much. It was great having your perspective. Omo Olato is an organizational and development professional. Thank you so much for joining me today.
Thank you, Ladi.
All right, we'll take a break now. When we come back, we're going to get a sense of what's playing out in most of the markets we track. That's in a moment. Just stay with us. Welcome back. Well, today I'm going to be sitting in for Anete for the markets. Now, let's get a check on what's playing out in most of the markets we track, starting with Africa. We see the NGX at intraday today still, trying to make a decision. But we're seeing 0.17% up, 97,401 points for the All-Share Index. South Africa is not looking bad, 0.19%. So hopefully we'll see if we get a positive close. That's for the NGX, the close of trade today. But let's talk to Senator Al Dunaz, a fixed income dealer at Axis Bank. Great to have you, Senator.
Thanks for having me, Ladi.
So first off, I'd like to get a reaction on the latest inflation data. It's higher. I guess that's with consensus as the expectation, from most of the analysts. But how are you seeing this data?
Yeah, so we recently saw the National Bureau of Statistics release the inflation figures for October. We saw a rise in those figures from 32.7% in September to 33.88% in October. This is largely in line with the expectations of market players. We had expected an increase in the inflation rate for last month. This is largely as a result of mostly fiscal issues, the rise in the petrol price, and the continuing depreciation in the currency. These are interesting stats in that we have a bond auction coming up next week, and we expect the Monetary Policy Committee to meet upper week, that's the 25th and 26th. So it will be interesting to see how they interpret this data.
And how's it going to play into the fixed income market?
For the fixed income market, as this was largely the expectation of most market players, we've not seen any much panic in the market. Market has continued to trade as usual. Across the Treasury bills desk, we've seen a bit of a bullish sentiment across the long end of the curve and a bearish sentiment across the mid-tenor securities. So we're seeing market players switch from the mid-tenor securities to the long-tenor maturities. To give you some color on rates, we've seen some of those mid-tenor securities trade at around the 24% handle, while the long end of the curve has traded just above the 23% handle. On the bond side, the on-the-run bonds have been the most sought after, particularly the 2031s. We've seen that bond trade at around 21.3%. That bond closed at the auction at 21.74%. So we've seen sustained appetite on that bond. On the 2029s, we've not seen much interest on that, so it has largely remained around the 20.75% that it closed at the auction. As I mentioned, there's an auction on Monday, so the DMO is expected to offer these two bonds, the 2029s and the 2031s. We expect that the auction will be oversubscribed as usual. The amount on offer is between 80 and 100 billion per bond for a total offer of between 160 and 200 billion across both bonds. So we do expect that the yields across both bonds will remain at where they closed at the previous auction.
And how do you see this latest inflation number, impacting what the operations we see with the CBN, doing in the fixed income market? How much pressure does this put on the CBN?
So the CBN has largely tried to tackle the continuing increase in inflation by adjusting the MPR, the monetary policy rate. So we saw that their last meeting, the MPR was moved to 27.25%. The CRR, the cash reserve ratio, was raised as well from 45% to 50%. So we might see that the MPC committee, the Monetary Policy Committee, would look closely at those figures to see if there's anything that can be done on those numbers to try to rein in inflation. But a lot of analysts are saying that a lot of these issues, the issues that are leading to increasing inflation, are mostly on the fiscal side. That if we were to tackle some issues on the fiscal side, we might see some gains. But that, of course, doesn't mean that the CBN would fold its arms and just let the inflation rate continue to slide. We do expect a reaction from the MPC and the CBN on Monday, not the coming Monday, the upper Monday, 25th and 26th. We expect a reaction from the committee. In regards to the fixed income market, there isn't really that much that can be done there, but we've seen the CBN continue with its OMO auctions. So a key contributor to the rise in inflation rates is, of course, increased money supply. So we've seen the CBN maintain its OMO auction to try to mop up excess liquidity as it rises, and that has, of course, yielded fruit. We've seen the market remain in negative in in a collective repo consistently. So yesterday we saw that figure at just under 220 billion, although today we've seen that figure come to the positive side at about 200 billion. We do expect that the CBN would sustain those auctions to try to mop up any excess liquidity as it arises.
And it almost seems like as the CBN is struggling to mop up all of this excess liquidity, something keeps pouring it back. Well, let's get a check on the recently we celebrated the FX reserves hitting about 40 billion, hitting that level and, regaining it after a long time, nearly 3 years. So do you see this accretion, continuing? And at some point, will we see impact on the Naira and the FX market?
Yes, and in fact, we have seen the efforts of the CBN contribute to FX stability. We've seen the CBN continue its interventions. The CBN has been in the market this week to sell FX to banks to try to match the demand that we are seeing. So the key issue in that space is that the demand has continued to outweigh the supply. So the CBN has stepped in at times to try to offset some of this demand. The CBN and DMO have also continued to raise dollars in different ways. Yesterday, we had the announcement that the Ministry of Finance, the DMO, will be looking to come into the market to, of course, issue a Eurobond sometime soon. We are waiting for more details about that Eurobond. So an effort like that will, of course, increase the war chest that the CBN and DMO has to stabilize the FX rate. To give you some color on where the rates are currently, they're still under 1.7. We've seen it at this level for some months now. The FX rate closed at 1,679 Naira 91 kobo yesterday. And we've seen the CBN continuous efforts to, of course, keep that rate stable. Apart from the efforts by the CBN itself, they have also continued to issue those home auctions at elevated rates. We saw the last rates print at above 24%. At 24% discount rates, those yields are above 30%. Those are rates that are hardly obtainable anywhere else in the world. So the CBN and DMO have kept those rates attractive to attract foreign portfolio investors into this market, which of course results in increased foreign exchange and a maintaining or an appreciation of our currency.
Yeah, definitely not easy keeping those yields attractive. But what do you see for the Naira next week? Any surprises?
For next week, in line with the trend, we do expect the CBN to, of course, come in to intervene. So we expect the FX rate to remain between 1.6 and 1.7. We don't expect it to hit 1.7 because we've seen it maintain its levels at just above 1,600. So we do expect that the CBN would, of course, keep it stable at those levels. There's also the bond auction on Monday, which should be attractive to some investors. So we might see some dollars come into the market ahead of that auction on Monday, which settles on Wednesday. So we might see a slight appreciation in rate.
Senator Audu, thank you so much for coming on. Fixed income dealer, Axis Bank. It was great having you. Happy Friday.
Thank you, Ladi. Happy Friday.
All right, now let's get a check on what's playing out to the U.S. The S&P 500 futures inched lower today in the morning as investors wondered what's next for the market after post-election rally. That's wavered. We see futures tied to the Dow Jones Industrial Average lost about 191 points, about 0.44%. And we see that's down 0.53%. S&P 500 futures, that's at 0.61% down. So we're seeing that Trump trade, that's fizzling out right there in this market. Extended trading, Applied Materials slid more than 5% after posting a weak guidance for revenue in the current quarter. Domino's Pizza jumped more than 7% after Berkshire Hathaway announced a new stake in the pizza chain. All right, let's get a check on what's playing out in Asia. We see Asia markets were mixed as Wall Street. That's following, the fall, with Wall Street and Jerome Powell saying he's not in a rush to cut rates. No need to rush for rate cuts, and that's rattled investors definitely. So to see the Nikkei 0.28% up for today. The Kospi, that was down 0.83% to close, and the Hang Seng Index up 0.13%. Other markets we track right there in Asia. I'm talking about India and the ASX 200 in Australia. We also see a mixed sentiment there. All right, let's take it on to Europe now. See, Germany's return to nuclear power would be the logical choice, and that's what the International Atomic Energy Agency, that's the IAEA, is saying during the COP climate talks in Baku. Germany has been struggling with, securing energy since Russia's war in Ukraine started in 2022, and the debate about restarting these power plants is continuing to grow. For more now, let's talk to Wavada Imrach there in Berlin. Good to have you, Vada. So Germany has phased out nuclear power plants. That's very recently. What caused them to approach it in a different way this time?
Thanks for having me, Laddie. It was definitely the realization that Germany depended on other countries such as Russia in the last decade or so to secure its own energy. I think that's why German politicians and political parties are ready to talk about nuclear power after having completely agreed to phasing it out more than a decade ago. Back then, nuclear energy accounted for more than 13% of Germany's total energy, which is a lot. And Germany is the only country in the world to have completely phased out nuclear energy. And so the IAEA, or the Atomic Energy Agency, said that Berlin's lawmakers are probably wondering why they're the only ones in the world to have done so. And while the original phase out was to prevent any accidents or threats to life, the decision was short-sighted. The IAEA chief said that nuclear power plants virtually emit no damaging greenhouse gas emissions, which makes it perfect for the phase out of fossil fuels. Politicians and parties here are looking into the feasibility of restarting these plants.
But what's happening with Germany's energy woes? Has it eased over the last year?
Well, I think it has periods where energy supply is stable but very expensive. Then there are periods when the prices are low, but they quickly climb back up again. Chancellor Olaf Scholz is hosting a summit today for industry associations, unions, and big companies. And the topic on the agenda, the biggest topic, is Germany's electricity prices, which are one of the highest in Europe and are affecting the industries here negatively. But it's not just the industries. Citizens are still paying high energy prices for heating and electricity as well. So the energy woes are far from over. A 2024 publication in the Journal of Sustainable Energy estimated that Germany would have saved hundreds of billions of euros and reduced carbon emissions by as much as 70% if they would have embraced nuclear energy instead of shunning it away and rejecting it. After Russia's war, Germany has been reeling with the consequences.
All right, let's get a check on the markets now. How's the Friday trade looking?
Well, the Eurozone economy expanded as expected in Q3, and employment growth showed improvement. Eurozone GDP climbed to 0.4%, double the expansion observed in Q2 this year. Employment grew 0.2% this quarter, and annual growth in employment stood at 1%. Economists in Europe said that this economic growth, though, is unlikely to be sustained. Investors have been keeping a close eye on this. The German DAX index will start lower today after closing at 1.4% higher on Thursday. Investors here were pleased with figures from major companies like Siemens and Deutsche Telekom. As the weekend ends, investors will keep an eye on U.S. private consumption data, which is widely regarded as a good indicator of the world's largest economy. The European Commission is also set to present its economic forecast, with many saying that Germany's bad economic performance will drag down the entire EU's economic growth.
All right, Vada, thank you so much for giving us the details of what's playing out right there in Europe. All right, now we see other stories. We see Rwanda is exploring innovative approaches to mobilize $6.2 billion in climate finance from 2024 to 2030 as part of implementing as the newly adopted climate and nature finance strategy at speed. The overall cost of implementing Rwanda's nationally determined contributions, which are national climate action plans by the government of Rwanda since 2020, is estimated at $11 billion. And the current financing gap is estimated at over $6 billion. I will see the CEO of Rwanda Green Fund said Rwanda will start implementing the new strategy by operationalizing the green taxonomy coordinate capacity building, and adopt innovative financial mechanisms as well as financial de-risking. I will see Ghana's Environmental Protection Agency has entered into an agreement to add the country's Ghana Carbon Registry, that's GCR, to a blockchain-based internationally transferred mitigation outcomes network. This follows an initial agreement between the two parties to operationalize the digital trading and settlement of ITMOs. By operationalizing ITMOs, Ghana strengthens its position as a leader in Africa's carbon markets. Simultaneously, the agreement between the GCR and Singapore's 013 helps the Southeast Asian nation maintain its status as a global hub for carbon credit trading. And the European Union has agreed to earmark a further 96 million euros to be mobilized over the next 3 years to support the social and economic development of South Sudan. The EU said this funding represents an additional contribution to the multi-annual cooperation program and that the European Union has with South Sudan and is the first of its kind. The European Union urged the government to substantially increase its funding for the implementation of the peace agreement and provide social services to its own population, including the payment of salaries. All right, let's get a check on what's playing out in the crypto market now. See, there's some green right there in the market with Bitcoin still weak, though. But let's look at the top headlines in the crypto space. Now, see, Matt Gaetz has been nominated as U.S. Attorney General. As a Florida representative and American lawyer, and has been nominated as Attorney General by President-elect Donald Trump. Was assigned due to his educational and career experience in law. And I hear he's pro-crypto. Now we see Bitcoin's 11.8 billion options is set to expire. The market is currently in a state of suspense as the high stakes expiry, that's 27th of December, that's approaching there. So definitely that's going to impact how investors see the market at this point. Is there going to be some kind of recovery for December? Seeing that the Trump trade seems to be weakening at this point. Then also see XRP. XRP has stayed stable around the 50 cent range for the longest time, acting like a stable coin, but we're seeing XRP surging over 40%. I guess the XRP army on fire right now. Let's bring in Denny Olokoro, who is a financial analyst, joining me via Zoom. Great to have you on the show.
Thank you for having me, and nice to be here.
Yeah, so it's quite a surprise seeing XRP up so much today. It's been at that 50 cent range for the longest time, acting like a stable coin. But now we're seeing this surge. Why is XRP pumping?
I would say one of the major reasons for XRP pumping is due to the recent developments that we've had in the last 24 hours. We had some conversations from Consensus CEO Joe Lubin, who stated that the US courts are likely to settle most of the crypto lawsuits. And we all know that XRP's lawsuit is one of the biggest in the crypto space with the SEC. And also yesterday, Gary Gensler, the SEC head, made a statement more or less like it actually sounded like a farewell speech in an event yesterday in America. And this has boosted the market sentiment for XRP. And unsurprisingly, XRP is the only top cryptocurrency that is actually growing today if you check the crypto market.
And do you think XRP could be that catalyst for the alt season?
Not really, because this development seems to be isolated. It's largely due to the bullish sentiment in terms of the fundamental analysis. That's the news that's coming out for XRP. For the general market, we all know that there are different drivers, and most likely we are going to see everyone move alongside Bitcoin. And we know that Bitcoin is the one that drives the market. So we are still waiting for different information to come in for the market before we see other altcoins like Join.
And where are you seeing this recent rise? Where do you see it going? I've heard speculations that maybe XRP could get to maybe $1, or the last high. I think the last high was about $3. Where do you see this one going?
I would say if we're able to have a quick resolution, and if XRP is able to hit its peak, which is the token for institutions, we're having banks adopting it, and we're able to see adoption, at least for the bare minimum, we should be expecting $1. XRP holders have been very, very patient alongside Cardano holders, and it seems it's their turn to smile this year.
All right, so definitely everyone, most investors will be looking out for that Santa rally. You know, we always talk about the Santa rally, and it seems the crypto market seems poised for some kind of Santa rally. Do you think it's going to come?
It's definitely going to come, because if you check the trend in the crypto market, after every US election, we tend to see a spike in the market. And currently we're experiencing something like that, where the price of Bitcoin has gone from about 65K to about 91K in the space of 2 to 3 weeks. And the rally is just starting. And the funny thing about this rally is that it makes all the predictions about Bitcoin that people have said in the past look more and more realistic. I remember when we have people like Michael Saylor saying that Bitcoin can hit 150,000, and 150,000 doesn't look far. So if 90K is just the beginning, then we are likely to see Bitcoin hit about 100 to 120K if the trend continues as has happened in the past.
All right, I guess the crypto market never fails to surprise, with what most of these price movements that we see. But very quickly now, what are you seeing next week in the market?
And what I'm seeing in the market is more or less like a mix. Many people are expecting the main correction to happen, right? Some people have said that Bitcoin could correct to around 85 to 86,000 before taking the next move to pump in the market. But for next week, I'm just seeing more or less the same. If we're able to get like exciting news in the crypto space, let's say Donald Trump makes some appointments that are pro-crypto, you might expect Bitcoin to pump again. And then we might be able to see the alt season follow. And there is lots of excitement in the crypto space. We are seeing more and more adoption. We are seeing new institution adoption. And I expect that trend is going to continue. And we are still early in the bullish season. So I expect that we might see some crazy moves in the coming days.
All right, definitely be looking out for that. Thank you so much, Adeni, the financial market analyst. It was great having your perspective today. Enjoy the weekend.
Thank you for having me. Yeah, thanks.
All right, there you have it. I guess most crypto investors, all eyes on any move Donald Trump makes at this point, and definitely that would drive sentiment in this market. But thank you so much. It was great. I'm taking you through all the markets this week. We definitely hope that next week gives us even more interesting news. Thank you so much for watching. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.